Hello, welcome everybody and thank you for listening today. This presentation is all about why private medical insurance is a waste of money, and what you can do as an alternative. This is a UK-based presentation. It is not relevant to people from other countries. Now, before we get into the specifics of private medical insurance itself, we need to just remind ourselves about the mathematical principles that insurance and banking are based on. Banks and insurance all work on the principle that most people won't claim on the insurance, or indeed try to all remove their deposits from the bank at the same time. If we look at the banking sector, for example, we know that the total value of all customer deposits does not equal the amount of money that the bank holds. If everybody tried to withdraw their deposits on the same day, the bank simply wouldn't hold that amount of money. You will remember the run on Northern Rock, for example. Insurance broadly works on the same principle. Insurance companies rely on the fact that all customers won't make a claim at the same time. This is why they have rules against claims during natural disasters and the like, when everybody would try and claim at the same time. So mathematically speaking, what you're paying for is peace of mind. Because from a mathematical point of view, insurance companies know that most people actually aren't going to claim on their insurance. If everybody did, the company wouldn't be able to operate in profit. So just think about that. Insurance from a logical standpoint is actually a waste of money for most people. So a couple of things to think about here. Where does your premium payment actually go? A lot of people naively think that their monthly premium is going entirely to the cost of whatever they are insured for. So for example, you pay your monthly private medical insurance premium. You think all of that money is going towards your funds when you make a claim. But obviously you are paying this money to a company, and companies have many different costs. So don't forget that as well as your claims. If you ever actually make one, plenty of other people are claiming too. The company has to pay its staff, and many companies also pay their staff bonuses, and to reward them for making the company more efficient. I will go into that in more detail later. There are the normal company running costs of business rates, rent, electricity, tax, that they have to pay if it is a private company. They are going to have to occasionally pay their shareholders some dividends. And all of the costs of running the company must come from your premium payments. They have no other income. So the reality is that only a fraction of the premiums that customers are paying to insurance companies actually go out on paying out claims. And only a tiny fraction actually makes it back to the customer. The rest of the money goes on the costs of running the company. Now, I will just make specific reference to the special case of Bupa, because Bupa obviously claims to be different from other companies. It is a mutual. Essentially it claims to be the equivalent of a charity. They like to tell the tale that Bupa only exists for the benefit of its members. So their argument is that they are able to reinvest profit. They claim it isn't siphoned off to shareholder dividends, but instead is reinvested into the company. However, what you can see really clearly here is that there is another avenue to divert those funds, and it's through increased staff salary and bonuses. You can see quite nicely here where your money is going. Look how well the senior employees at Bupa pay themselves. The current chief executive officer of Bupa, Enrique Irino, paying himself a nice salary there of £4.6 million last year. This included bonuses. Don't forget that bonuses are based on how well they save the company money, and convince customers to pay them more. So where does your premium go? If we were to divide this up, as I've explained already, a lot of the money that customers paid to the company go to simply the cost of running the company itself, and only an absolute tiny fraction goes on paying claims. So mathematically speaking, you're paying for a very expensive product, and getting little value out of it. Now let us move on to talk about specifics in medicine itself. So for many years the doctor-patient relationship was quite a simple one. A patient wanted to see a doctor. They would make an appointment and go to see them. You can still do this. In fact, with private doctors and hospitals, you don't need to use a private medical insurance product to see a doctor. You are fully entitled to directly approach any specialist yourself, book an appointment with them, and do what is called self-pay. In other words, you pay for the appointment and any tests, or investigations, or treatments for yourself. The advantage of this is that all the money you pay goes towards the costs of your treatment, rather than a substantial proportion of it going towards the running costs of the insurance company. Now, private medical insurers are essentially middlemen, or agents, who have placed themselves in the middle of this relationship. Effectively, they have shoehorned themselves into a relationship, when in reality, they do not actually need to be there. And you can see, the siphoning off of your money goes further than just the costs that go towards running the company. When you do actually make a claim, an insurance company again removes a significant fraction of your money that should be going to pay for your treatment. They utilize various mechanisms to reclaim it back to themselves. So one of the most common disincentives to discourage you from using your insurance is to place an excess on it. This is in effect a penalty for activating your insurance that year. And then the other big issue is with shortfalls. So for example, if a treatment costs £500, for example, an MRI scan, the insurance company might only cover up to £400, and then you are liable to pay the £100 difference yourself. Now let us say that you go to see a consultant and their outpatient fee, let's say you are in London, is £300. You might have a £100 excess. Furthermore, the insurance company might only cover that consultant up to a limit of £250. So you also now have a £50 shortfall. What that means is that of the £300 consultation fee, the insurance company is taking off £100 plus £50. They are only actually going to pay for £150 of that appointment, and you are liable for the rest yourself. Rest yourself. So private medical insurers have lots of these disincentives. They want to discourage you from using your insurance, because it costs them money obviously, and they want to make a profit. I have already explained about the excess and shortfalls. Another significant disincentive they will use is premium hikes. So for example, with car insurance, you have no claims bonus, which you lose if you claim on the insurance. Very similar things happen with private medical insurance. If you make large claims in 1 year, the insurance company will simply raise your premiums significantly for the years following. And also very unfairly with private medical insurance is the age discrimination, because your premium will go up and up the older that you get, and starts to rise exponentially over the age of 65. 65. Now, we are very lucky to have the National Health Service in the UK, which means private medical insurance has a relatively low uptake compared to some countries. Since we have an excellent safety net, what you need to understand about private medical insurance is that it is not a fully comprehensive policy. It does not cover all health conditions like the NHS does. In fact, private medical insurance is restricted to very specific circumstances, and has many different exclusions. As a general point, private medical insurance and private healthcare is geared towards simple elective, self-contained care, and the more complex a medical problem becomes, the more difficult it is to treat in the private sector, and the likelihood is that your consultant will try to transfer you back to the NHS anyway. This is because complex and multidisciplinary care is expensive and difficult to coordinate. It is best done in the National Health Service, and is a really difficult thing to do in the private sector. Now, if we look at other exceptions with private medical insurance, it generally only covers secondary care, not primary care. So appointments with general practitioners are not covered usually with private medical insurance. It is also quite difficult to deliver emergency care in the private sector. The infrastructure of private hospitals is simply not set up to respond to emergencies. For example, There aren't doctors on call 24 hours a day, and there aren't the emergency facilities to deal with genuine emergencies. So no private hospital really can cope with people who become critically ill. For example, if you are having a heart attack or other life or limb-threatening problems, and often they have to transfer patients back to NHS care when things go really wrong. If you are looking at a new treatment or research-based treatments, you want to get into a clinical trial, for example. You won't get this through private medical insurance. This is all done through university hospitals. Again, it is not covered by PMI. Obviously, one of the biggest exceptions for private medical insurance is that they exclude chronic and long-term conditions. And this is the vast majority of medical conditions, in fact. If you have diabetes, if you have asthma, if you have rheumatoid arthritis, that is not covered by your private medical insurance. They will cover you for the initial diagnosis, but no ongoing care. Another big exception is pre-existing conditions. Any condition that you bring into the policy with you, it will not be covered. And as I've said before, complex and multidisciplinary care is difficult to deliver in the private sector. So as you can see, private medical insurance is restricted to quite a limited branch of medical care, namely elective medicine. It's good for things like hip replacements or a cardiac bypass, but not for complex and difficult conditions. You also need to remember that cosmetic plastic surgery is, generally speaking, not covered at all by private medical insurance. This is all done on a self-pay basis. Now, in the struggle to contain costs, private medical insurers are coming up with more and more schemes to manage cost and restrict choice for patients. One of the big reasons patients choose private medical insurance is because they want freedom of choice. Freedom of choice to see whichever specialist or consultant they want, whichever hospital they want to go to, and whichever treatment they decide to have. But increasingly, private medical insurance restricts all of those choices. So for example, you want to go to the best locally, the 5-star hospital. That will tend to be a more expensive hospital. It will be excluded from your policy, and you will be told by your insurer that you have to go to one of the cheaper hospitals. Similarly, and this is very important, experienced consultants who have many years behind them, and who tend to be the best and most capable of dealing with problems, they are excluded from many insurance policies. Now these senior consultants, they tend to be popular. They may even have waiting lists, and be more expensive, and insurance companies don't want to pay for them, so they are restricting your access to those more experienced consultants, and forcing you to see more junior consultants, who are cheaper. Finally, there is also a restriction on treatments. Whereas all effective treatments will be available on the NHS, a lot are restricted by private medical insurance, and you can be restricted to the cheaper treatments. Examples of this might include things like biological treatments for neurological or rheumatological conditions, or an expensive chemotherapy regime. These treatments are very, very expensive, and there may be specific exceptions named on your policy. So who has private medical insurance generally speaking? Well, as I alluded to earlier, it's not that common in the UK. Statistics tell us that only about 11 to 13% of the UK population, or 1 in every 9 or 10 people, has a private medical insurance policy. About half of people who have PMI have it through work. It's a corporate policy. And about the other half have taken out a personal policy. Now, it's expensive. And it tends to be people who are in the top 10% of earners in the UK. In other words, people who generally speaking have a salary of £50,000 to £60,000 per year or more. Now, people who have that kind of salary can afford the alternatives. For example, they can probably afford to put £20,000 in a tax-free ISA account and save this for a rainy day. Other things to consider. The average annual premium of about £1,500 per year. This will rise with age, and will also rise if you make claims. If you consider a 47-year-long working life, from the age of 18 to 65, you could be paying a total lifetime premium of nearly £70,000, and potentially for an insurance product that you never actually use. The statistics tell us that over the course of a lifetime most people either never make a claim, or only claim once. You simply don't get the value from it over the course of a lifetime. You are unlikely to recoup the investment you have made in the policy. Now, you can see that the quotes for PMI vary massively around the country. As always, it's always more expensive in London, where the hospitals and consultants tend to be more expensive anyway. By the way, if you do happen to be watching this from the USA, your healthcare is so ridiculously expensive it's actually cheaper for you to get a flight and hotel to the UK, and get treated here and return to the USA, than to use healthcare services in the USA. I'm not kidding. So, I've told you about why private medical insurance is such poor value for money, such poor freedom of choice with many policies. Most policies have restrictions on the higher quality, more experienced consultants and better hospitals, which tend to be the more expensive ones. So what are the alternatives? Well, as I've said before, people who can afford private medical insurance policies ought to be able to afford the alternatives too. As I've said before, what are you actually going to use private medical insurance for? You will not be using it for an emergency, because private hospitals cannot deal with you in an emergency. You are only really using it for non-urgent elective care, and for very specific indications. I would recommend that you go self-pay. This stops the private medical insurance company siphoning off your money to pay for their existence, and you establish the direct relationship with the consultant that you choose. This way all the money that you spend goes to pay for treatment, instead of subsidizing your insurance company. You should save £20,000 in a tax-free ISA for a rainy day. If you never use it, the money is still yours. You haven't given it away. If that option just isn't for you, there are other options. If you want to pay for a hip replacement, all private hospitals have finance arrangements, just the same as if you bought a car for £20,000. You might pay a deposit and then pay for years of monthly payments. You can do the same with expensive private medical care. Here are some examples of some of the most expensive things that you can get done privately. Hip replacements, knee replacements, spinal surgery, cardiac bypass or heart valve surgery, or a course of chemotherapy and radiotherapy. All of these things can be paid for as self-pay. Now, I wanted to talk a little more again about the reasons people choose to go private. I've headed this under 3 different domains: speed, quality, and choice. But what if, you say, when using a private medical insurance policy, people obviously do want a speed of access to healthcare. Don't forget, however, that with many private medical insurers they still obligate you to see your NHS GP in order to get the referral, so you will still have to wait for that appointment. Increasingly, insurance companies are employing their own GPs through companies like Babylon, etc. But these are not face-to-face appointments. Other companies have alternatives. For example, they ask your consultant to fill out long forms to explain your condition, which the consultant then has to take time to do and charge you for personally. What about quality? Well, as I've explained to you already, insurers, in order to mitigate costs, are increasingly restricting access to experienced consultants in favor of cheaper, less experienced doctors. And finally, choice. As I've explained already, many insurers now restrict patients to a very limited list of consultants and hospitals. So, I just wanted to make you aware of something incredibly important that is probably peculiar to the UK, and nowhere else. What you certainly must remember is this, as a UK tax-paying citizen, is that you can never lose your entitlement to NHS care. If you have paid your national insurance and you are registered with an NHS GP, you are entitled to NHS care, no matter what anyone says. This is even the case if you start your treatment privately, but then choose to go back to the NHS. An example of this would be, if you start off with a private GP appointment, which you might pay around £50 to £100 for. You see a specialist and have some diagnostics. This will most likely still come in around £250 to £300 for the appointment, and up to £500 for an MRI, for example. Now, at this stage you've got a diagnosis and you've skipped the queue by a significant amount. You are perfectly entitled at this point to loop back to your NHS GP and demand treatment on the NHS. You may be unlucky and come across an angry NHS GP. Some of them take offense that you have done this, like you've somehow insulted the NHS. Frankly, it is tough luck. You are still entitled to the care. You should also point out to your GP that you've already saved the NHS some money by paying for diagnosis that the NHS should have been providing for you. Now, I've been really down on the private medical insurers here, and you might think I'm quite biased. They may offer a counter-argument to you. They would state that they act as intermediaries, acting in their customers' best interests, and use their buying power to negotiate better deals for their customers with private hospitals and consultants. However, if 90% of your premium is being siphoned off elsewhere, how does it really advantage you if they arrange a 20% discount? The fact of the matter is, you are still way worse off and better paying directly for the care yourself overall. Cut out the expensive middleman, the insurer, who offers little added value. Now, don't be under any delusions that private medical insurers accurately measure quality. They don't. In fact, quality of care is extremely hard to measure. We do have some loose indicators. For example, in surgery we can measure infection rates, complication rates, and mortality rates. And individual doctors can also audit their outcomes from their procedures. And we also have something called patient-recorded outcome measures. However, it is extremely difficult to measure soft skills that are so important, such as the ability to make a correct diagnosis and choose the right treatment. These kind of things only come with time and experience, and tend to be skills held by more senior doctors. But don't forget, your insurance company is doing its best to keep you away from the more experienced senior consultants, because they tend to be more expensive. Some private medical insurers do use some limited measures of quality, such as measuring the rates of complaints made by customers about consultants, or collecting customer satisfaction scores. However, this does not measure the clinical quality of the care given. So when private medical insurers say that they are recommending consultants based on quality of care, they are lying. They base it on cost, and they are now ever more favoring cheaper consultants. Don't forget that popular, quality consultants are not short of work. They have built up a reputation for excellence locally, based on word-of-mouth recommendations. It's other doctors who know if doctors are good at their job. They do tend to be more expensive, and as a result focus on the self-paying customers, rather than the cheaper insurance work. Increasing numbers of consultants simply refuse to accept private medical insurance, because it is at the cheap end of the scale. Patients who are self-paying do not have to put up with these restrictions. So, up until now, I've spoken a lot about the alternative options for personal customers, with their own policies. But what about businesses? Well, for a start, corporate policies are some of the worst policies that offer the most restricted of choices. Often corporate customers will be limited to a very restricted list of consultants that the PMI has chosen. If you have over 1,000 employees in one city, a good option could be to employ your own GP and physiotherapist. You could open this out also to employees' partners and children. Or if you want to contain costs, restrict the service to age range 4 to 65, or 16 to 65. Why is this? Well, all of the heavy lifting in general practice occurs in young children and the elderly. People of working age tend to be generally fit and place a much smaller demand on healthcare services. You can then take the option of paying hospitals directly for diagnostics, and paying specialists directly for treatment. Or you can limit the service to appointments and diagnosis only. You can literally make the entire product bespoke to your company needs. Company needs. Finally, if you don't believe what I've been telling you, I would like to point you towards newspaper articles from broadsheet journalists. These tell the story. Have a look through these links. These are just a couple of articles that have come around recently. There are plethora if you look on Google. In summary, private medical insurance is a waste of money. Pay for treatment directly. Have a direct relationship with your specialist and hospital. Keep rainy day money for medical care in an ISA. If you don't use it, it's still your money. Don't pay an expensive insurance company to siphon off your premiums into profits in return for a poor quality product. Thank you for listening.